The semiconductor market seems very lively right now. With AI, computing power, processors, subsidies, news stories every day, but the truly important choices are quietly happening. AMD and Intel have both risen significantly this year, but they're not following the same path. One is rapidly realizing its AI growth, while the other is a high-leverage, asset-heavy, slow variable systemic rebuild. In this video, we're not picking sides, just breaking down which path is the more manageable risk. Hello everyone, this is Stock Market Breakdown. Today, we're not talking about a single stock, but a critical fork in the road for the next few years, AMD versus Intel. Many people only focus on who's rising faster or who has the bigger story, but the real question is this. As AI moves from imagination to execution, which business model can truly handle the pressure? I'm not giving trading advice, just breaking down both paths clearly. Let's start with the price and the most intuitive observation. Right now, AMD is around $214, Intel around $37. Both companies have seen more than a 50% increase this year. If you look at just 1 year, they seem similar, but when you zoom out to 5 years, the picture changes completely. AMD has been on a strong upward trajectory, clear and consistent, while Intel is still in a long recovery phase. This isn't about luck, it's about the completely different paths these two companies chose over the past few years. The market is currently pricing AMD as a high-growth, high-execution story, while Intel is being valued for its rebuilding, not yet realized patience. The question is never who's stronger, but rather, when the environment is no longer so friendly, which path is more likely to stumble. So, if you're asking just one question now, which is better, AMD or Intel, then that question itself is already wrong. The real question is, are you betting on a fast lane that requires continuous flawless execution, or a slow rebuild that requires time, capital, and patience? These two risks are completely different, and the market's tolerance for them is entirely different as well. Let's first look at AMD from a numbers standpoint. It's almost flawless. In the most recent quarter, revenue grew 36% year-over-year, and net income jumped 61%. Data center, client, and gaming all pushed forward, with AI accelerator cards, servers, and PCs all landing at the hottest spots right now. AMD is surrounded by the right things happening, but here's the problem. When the market already assumes your success is a given, any deviation in rhythm will be magnified as a risk. AMD's story, fundamentally, is a high conversion rate path with very low margin for error. It's not that it can't slow down, it just can't afford mistakes. If execution falters, valuation will react first. This is why, while AMD's stock performance looks strong, it also feels increasingly tight. The market isn't giving it leeway, it's demanding performance. You'll see, the more we get into this stage, the more stock prices will react more strongly to any minor movement than to the fundamentals themselves. Now, let's turn our view to Intel. If you just look at the growth rate, it's clearly behind, but if you look at cash scale, manufacturing capability, and national-level resource allocation, you'll see Intel is taking a completely different path. Intel is repairing its product competitiveness, while rebuilding its manufacturing system, all while carrying a heavy capital expenditure and long-term debt load. This is a classic asset-heavy restructuring story. The benefit is, once it's right, the moat will be deep, but the downside is clear. Before it's right, the market will keep questioning three things. Is the money enough? Is the time enough? Do shareholders have the patience? So, what you're seeing now with Intel is not a failure, but a market that hasn't yet been fully convinced. What Intel needs isn't just 1 or 2 bright quarters. It needs a stable, mistake-free execution period, and the market is always very tough on this kind of story. When you put AMD and Intel together, you'll see a crucial comparison. AMD's risk is concentrated in whether it can keep executing perfectly in the future. Intel's risk is in whether its structural rebuild will ever fully materialize. The former fears that even a slight collapse in expectations will compress valuation. The latter fears that time may not be on its side, and patience may run out. That's why analysts are giving AMD high price targets and ratings, while Intel is more cautious with a longer timeline. This isn't a difference of emotions, it's a difference in risk models. So, if you ask me what the market is trading on right now, the answer is actually very simple. The market is using valuation to vote on the path, not just voting on the current quarter's earnings. For AMD, as long as AI investments keep growing and partnerships continue to land, there's still room for this growth path. But if competition intensifies and customer bargaining power rises, valuation flexibility will turn into pressure for Intel. As long as manufacturing capabilities, partnerships, and cash flow stabilize, it will slowly re-enter the pricing model. But before that, any macro volatility will be amplified as structural risk. This is why both companies have risen in the short term, but the psychological cost they bear in the long term is entirely different. So, in today's video, I'm not choosing AMD or Intel. I just want to make one thing clear. This isn't a contest of who's smarter, it's a choice of which risk you can tolerate better. Once you truly understand this, you won't be swayed by short-term fluctuations. This is Stock Market Breakdown, and we'll continue breaking down the truly important structural issues next time.